Forex candlesticks patterns are a form of charting analysis used by the forex traders to identify potential trading opportunities. This is based on historical price data and trends. In particular, they are commonly used for forex trading. You can also use this for synthetic and crypto trading. They rely on past price action to forecast future price movements. Yeah, we use candlesticks to forecast what will be happening in the future terms, maybe tomorrow or in some month or weeks to come. Types of charts. There are three basic and most popular types of charts. We have line charts, we have bar charts, and we have candlesticks. Line charts. A simple line chart draws a line from one closing price to the next closing price. When struck together with a line, we can see the general price movement of a currency pair over a period of time. Here is an example of a line chart for Euro USD. Look at this diagram very carefully. Look at this diagram carefully, closely. Okay, look at this diagram closely. We have a line chart. This is what we call a line chart. Bar chart. A bar chart also shows closing prices while simultaneously showing opening prices as well as the highs and lows. The bottom of the vertical bar indicates the lowest traded price for that time period, while the top of the bar indicates the highest price paid. So the vertical bar indicates the currency pairs trading range as a whole. The horizontal hash on the left side of the bar is the opening price, and the right side horizontal hash in the closing price. Here is an example of bar chart for Euro USD in the next image. Looking at this is bar charts information. Bar charts information. I will not be talking much about bar charts, because the main charts we forex trader use are line chart and candlesticks. High, close, open and low. Bar charts, also called OCHLC charts, because they indicate the open, the high, the low and the close for the particular currency. Here is an example. Let's look at the open. The little horizontal line on the left is the opening price. Yeah, we can see this. And let's look at the high. The top of the vertical line defines the highest price of the period. Now this is the high price of the period. Now let's look at the low, which is this. The bottom of the vertical line defines the lowest price of the time period, while the close, the little horizontal line on the right, is the closing price, which is this. Let's continue. Now talking about candlesticks. The candlesticks chart shows the same information as a bar chart, but in a prettier graphics formation. Candlesticks bar still indicates the high to low range with a vertical line. However, in candlesticks charting, the large blocks in the middle indicate the range between the opening and the close price. Traditionally, if the block in the middle is filled or colored in, then the currency closed lower than it opened. In the following example, the field color is black. For our field block, the top of the block is the opening price and the bottom of the block is the closing price. If the closing price is higher than the opening price, then the block in the middle will be white. Now let me talk about this. We have upper and we have lower shadow. We have the real body, we have close, we have eye, sorry. We have the upper shadow and the lower shadow. We have the real body, we have eye, close, open and low. Now this indicated the high, which is the wick. We call these candlesticks wick, the high. This place is the close. This place is the open. While this place is the low. This is for a what? A bullish candle. Why this is the high, the open, the close and the low. This is information for the bearish candle. You understand this better in the next view. Types of candlesticks. We have hammer. The hammer candlesticks pattern is formed of a short body with a long lower wick and is found at the bottom of a downward trend. Now I will not waste too much of our time in this course, just for us to gain the what we need. Looking at this candle information, this is known as what? Hammer candlesticks information. Hammer shows that although there were selling pressure during the day. Did I really need to talk much about these candlesticks? I will not talk much about candlesticks in this course because I don't want this course to be boring or be complicated for you to learn. So here I will only talk few about candlesticks and make a video for you on candlesticks and how we go about candlesticks information. So this is hammer candlesticks pattern. Let me talk a little about the hammer candlesticks pattern. The hammer candlesticks pattern is formed of a short body with a long lower wick and is found at the bottom of a downtrend. I'll make a video for this and I will talk about this further. Inverse hammer. Look at this carefully. You can see this hammer is looking like it's moving to the upside and this shows downside. Inverse hammer. Look at the information of this hammer and look closely to this. You can see we have this information. There's a wick to the upside, yeah, and there's a wick to the downside. This is known as inverse hammer. It is a bullish pattern. The only difference being that the upper wick is long while the lower wick is short. It indicates a buying pressure. Yeah, it indicates a buying pressure followed by a selling pressure that was not strong enough to drive the market price down. Now you can see we have what we have a downtrend. There's a sell right here. It indicates there's a rejection here, and we have inverse hammer information shows that there's a bullish pressure right here. Let me go further. Bullish engulfing. The bullish engulfing pattern is formed of two candlesticks. The first candle is a short red body that is completely engulfed by a larger green candle. Now let me talk about this. Look at this candle information. We have this bearish candle and we have this bullish that engulf this. What do I mean by engulf? It surpass this, it break above this, it grow above this, it engulf this. Look at this candle information. Look at this. This could not engulf this one, but look at this bullish candle, it engulfed this, which shows a strong bullish move, a strong bullish signal. Bullish engulfing pattern shows a strong bullish signal. Bullish engulfing candle shows a strong bullish potential direction. Strong red candle body on first bar. The close of the second bar must be more than halfway up to the body of the first bar. Reversal signal after a downtrend. Yeah, look at this candle information. Like I said, guys, I will not be talking much about this candle because I don't want to waste much of our time. See you in the next video, guys.